hope. Looks like you're already ready. Okay, go live. And going live. Okay, good afternoon, ladies and gentlemen. My name is Manoj Atri. I'm a real estate agent with Remax Hallmark. And sorry for there was a slight delay in going live, but I think I am live now. Before I begin, before I begin the webinar and the article that I have online, which is from renter to homeowner in 9 steps. So that is what I am going to walk you through today. And before I start that, let me give you the main headline or the format of this particular one. People are making more money in real estate, with real estate, than their incomes. So if this has been, I have seen in the past 5 or 7 years, all of my clients who had bought properties, they are sitting on a tremendously good equity at the moment. So basically, bottom line is that buying a real estate was in their interest, and they are sitting on a good, tremendous good equity. It is so good that they could not have done that by saving from their incomes. And that is the reason I have picked it up, this particular thing. And the request that I'm trying to make to the people who are still sitting on the side or still renting is stop paying your landlord's mortgage and start building your own equity. I understand that's sometimes very difficult to do, and lots of renters have lots of apprehensions, lack of information, and that is where what I'm trying to address today. So I will walk you through these 9 steps and make it as simple as possible for you to at least get some ideas, and so that you can take very good decisions. Also remember, each one of yours situation is very different, and you may not understand the whole thing, and you may require some other alternatives. Feel free. I will be able to guide you accordingly with all those particular things also. So just feel free to call or put in your query there, and I will see if I can pick up anything, and I will try to answer those. So let's jump into it and take you to the first thing. That would be, I'll pick up some articles, and once I pick up those particular articles, I will be then able to guide you accordingly. See, this is what is going on in the market at the moment. This is by CBC News. With rents soaring across Canada, some people are getting priced out. And this is what is the trend that is going on in the market for the moment. The rents have started going back up again. So this is rents across Canada, not only just in Toronto or the Greater Toronto area, across Canada. And people are getting priced out. The incomes are not rising that much as the rents are soaring. And the reason is, again, the supply is not there. Now, let's check up on another article. It's by the company stories.com, and they're saying GTA rents reach new heights as vacancy rate falls. So this is the next thing. Again, GTA rents reach new heights. They are going very high, and the vacancy rates are falling. That is what we are seeing in the market. And again, this is what I am trying to walk you through here. If you are a renter and you're still on the sidelines, or you haven't understood the whole format of buying, or there are some basic questions that you are getting missed information from everywhere else. That is what I'm trying to walk you through here, and I'll make it as easy as possible with today. One more report, and then we will jump into the whole format. This is by Financial Post, and it says, a report shows sharp jump in Toronto rents, echoes findings on other major cities. And that is what we are seeing at a lot of other places. Again, a report is showing sharp jump in Toronto rents. And this is all, I'm picking up articles from the last month, so July onwards. So this is what we are coming back and again, that the rents are increasing. And again, I'm reiterating myself, stop paying your landlord's mortgage. It may be difficult, but you need to get your mind set up and started with that one. I'll be able to answer you some of the basic questions. And once you are able to understand, okay, how does this whole buying or format works, and what are the things that are there, that is what I am going to take you to the main article. And that is what we are going to start now. Okay, so this is one of the web page that I've built, and just you can email me, and I will be able to send you a PDF format of this one, so where you can actually fill in this particular information and take it to the next level. I hope, I'm waiting, I hope you can hear me out properly. If there is any other challenge, so let me know. But otherwise, I should be able to guide you here completely. So again, from renter to homeowner in 9 steps, that's what I'm trying to walk you through. And again, I just reiterating myself, I'm Manoj Atri, Realtor. I'm with Remax Hallmark Realty Limited Brokerage here. Once you have this PDF, you can check about me, and this is what I am, and you can go through this one. And if you love real estate investing as much as I do, then call and email me to discuss strategies regarding buying, selling, flipping, rent to own, lease options, interest only mortgages, low or no money down, bank cashback program, money for renovations, all kinds of credit, info on fixer-upper, power of sale, estate sale, and much more. So feel free to walk me through. I am with Remax Hallmark, and I tend to have an architectural background. We'll be able to guide you even further regarding purchase and sale also. So this is now let's go through the main article here, from renter to homeowner in 9 steps. Okay, so I hope you are there with me, and I will take it slowly. Now, whether you're doing buying or doing rent to own or any other format, there are 3 components that are there. And that is those 3 components have to be understood. Once you understood those 3 components, you should be absolutely fine and able to handle this. The step number 1 is your annual gross income. This is the first thing that you need to know. And that is, calculate your annual gross income. So the main thing that you have to say is, how much is your annual gross income? That is an income including the taxes and everything. So full annual gross income, because that is how all these calculations are done. Then calculate your own annual gross income. So that is your step number 1. And calculate each and every person's annual gross income. So let's say suppose your annual gross income is $50,000 and your partner's annual gross income is $50,000. So the combined income is $100,000. and let's say suppose your kids are there and they are also trying to buy with you, and their annual gross income is around $25,000. So a combined income of $125,000. So do it individually and then do it combined. So here, fill in here each and every person's, or you can fill in the combined income of the household. So let's fill it out here. And let's say suppose that is around $125,000. Okay. So this is the basic that you do, and you fill it out, this particular information in here. Second step that comes is the down payment. Now, you require some down payment and you require some closing cost. Combine the two and say how much is the total amount of down payment and the closing cost you have. Let's say suppose you have close to $25,000 to $30,000, and check up with every person's and see how much money they have in their bank accounts, how long they have been having that particular amounts, and then let's say suppose it is close to $30,000. So put down here, let's say suppose the down payment amount is $30,000. If you are lacking on this particular down payment, there are some other alternatives which I'll be able to guide you. So do not panic. There are lots of options always there. And there are also, you can borrow from family and friends also. You may have money in the RRSP. So there are lots of formats that it can work with. Do not be restricted. Just, okay, I don't have the funds, so let's not even go through there. No. There are other bank options that are there, which I'm going to walk you through down the line. So whatever is the maximum amount of dollars that you can come up with, try to write it down here. And this will help you to get an idea that you can go to the next level. Now, these are the basic 2 to 3 things that are required. Now, the third thing here, the third step that we require here is the credit score. Now, this is important. This is one of the component that will help us guide you further. So you need to go and get some information regarding your credit score. Okay. Now, let's say suppose you have no clue where to get this credit score from and what is your credit score. Okay. So here are 4 links that I have in this PDF, and I will be able to email it to you so that again you can comprehend this one. These are the 4 companies which you can go. One is Borrowwell. So you can come over here, and on this PDF you should be able to go to Borrowwell, and this is where you will be able to go and check your credit score, and you will be able to do it for free. So this is a company called borrowwell.com. Start with your free credit report. You can go here and you can check your credit score here. Okay. Now let's go to the next one. Next one is Credit Karma. So you can again go to this particular one, and here again your credit score should be free, and it is now. So creditkarma.ca, sign up for free, and you can check your credit score here again. Now the next one, let's give you the heads up on the next one. Equifax. You can go to this particular website, and Equifax has both, I think so, the free version and the paid version. And so you can go through it, and there are some other areas that you should be able to check into, and you should be able to find your credit score for even for free, but they take their time to get through the mail and things like that. Here you can spend around $20 as per them and stay in control, and maybe they may have some other charges, so you just look into it. but it is consumer.ecofax.ca, and you should be able to go and procure your credit score here. The next one is TransUnion. So you can again click on this one or go directly to the TransUnion website, transunion.ca, get your Canadian credit report and score, and you checking your credit score won't lower it. This is also one of the main comprehensions that you have, so that whether the credit score goes down or not. I think so. If you check it up on your own, maybe it doesn't go down, or because it's a soft inquiry, but it'll be better if you touch base with a mortgage broker or someone else who is an expert in this one, and they can guide you further. Okay, so these are the 4 places where you can check your credit score. So now let's say suppose you have excellent credit, and let's say suppose your credit score is 700 plus. So this is what you can write down here. What exactly is your credit score? Because once you call me, I need these 3 particular, or you call any professional, these are some of the basic queries that they need. Your annual gross income, your down payment, and your credit score. So compile that information. These are just basic minimum steps. This will give you a good idea on your own. I'm going to walk you through the next few steps. This is something that will give you a good thumb rules and a good idea where do you stand exactly today. Okay, now let's go to the next stage, which is important. So we have checked up your credit score. You have a good idea there. You know your down payment. You know your annual gross income. This is the 4th step, and that is also which will come in handy. How much is your debt? Do you own you have student loan, you have car payments, you have some other student loan issues? This is what you need to compile, so that when some professional is seeking that one, this is another thing that they would like to know. Now, let's say suppose you are absolutely doing great. Your credit score is good. You're absolutely, and you have 0 debt. So write down whatever debt you have, but let's assume you have 0 debt. So you can write down here that you have a 0 debt. So these are some of the things that you can get an idea about most of the time. And the only thing that is lacking is the basic information that is being not perceived by you, or like, how should I begin with it? So these are some 3-4 steps now that are there. Now let's get into the next one, which is step number 5, which is a condo purchase price. So now a condo, the difference between a condo, the next number 5 and number step is a condo and a freehold. Properties which have maintenance fees, they come under the condo format. And the ones without the maintenance fees, they come under the freehold format. This is the basic ones. Some of the freehold also may have some kind of a fee there. We can go into the details there. But for now, at this particular moment, a condo, apartment, condo townhouse, stacked townhouse, and then the freehold, you have the freehold semi-detached properties, freehold townhouses, freehold detached properties, duplexes, multi-residential, all those ones. But the basic difference between the condo and the freehold is with maintenance or without maintenance. So with maintenance is a condo, without maintenance being a freehold. Now, let's see what exactly you will qualify for. I'm giving you, this is like a basic thumb rule for you to work. So we had come up with that your income was around $125,000. So for a condo, you will qualify 4 times the income. So if your condo was $125,000, your annual gross income was $125,000 multiplied by 4 times. So you will qualify for a condo up to $500,000. Now, so what would be your purchase price for a condo? $500,000. Let's write down that in here. So this will give you some idea here. So if your income was 125, you will qualify as a thumb rule 4 times the income. It can go up to 4.5 times depending on the maintenance of the condo building. So there is some variations there, but a bottom line, a good thumb rule, 125 is the income, 4 times the income, 4 times the annual gross income. And so multiply your annual gross income by 4 times minus any debts. Okay. Now, if you had some debts, it may go down slightly, but if the condo maintenance was less, then it may come back to again the 4 times the income. So there is a variation between those two, but a good thumb rule, 4 times the income will work. So now let's go through the freehold purchase price. Now this one can go all the way up to 5 times the income, depended upon you have an excellent credit score and you have no debt. So again, 4.5 times will again work around for a freehold, and maybe stretched up to 5 times as a thumb rule. But this will give you some kind of variations there. So basically, if your income was around 125 and you had an excellent credit and you have the down payment to support it, you may be able to go all the way up to 5 times the income. So depending upon no debt, credit score is excellent, and everything. I'm just giving you the max on this particular one. This is stretching to the limit. Okay, so for a freehold, you may go all the way up to $625,000. Okay, now this has given you some basic information here. Now let's go to step number 7, which is the most important one. We have analyzed that either for a condo, you will get approved for up to $500,000. And why are we doing this particular exercise? This is the reason that you do not even have to call a professional and seek it. You can do this homework on your own. So we have analyzed 4 times the income for a condo, 5 times for a freehold, just to round about things there. They are all in proximity and there are good thumb rules there. Now let's go to the next step. Okay, for a $500,000 property, where can I find these condos? Because that is the next step, because that's another challenge waiting to happen. Where can I find the next the properties in this particular price range? And that is also an exercise that you need to do. This will give you a good idea on your own. That is what I'm trying to walk you through. From renter to homeowner, and these are a few basic steps that you will take. If you can take these basic steps, you should not be sitting on the sideline. You should be able to take an action. Okay, let's go through the next steps. Review Toronto GTA listings. These are the 2 websites I'm giving you here. You can go there and check the listings in there, which is very important, because this will give you a very good idea for a $500,000 property for a condo, or up to $625,000 for a freehold, where in which part of the city, which part of the areas I can find properties. Now these are the 2. Let's go to the first one, which is realtor.ca. And this one will give you a very good idea in all the areas. So put in minimum price, maximum price, and what you are seeking, and you get the results, and you'll be able to see lots of listings in there. So the first website I'm giving you here is realtor.ca. Okay, let me give you another website. So one of the listings you must be already knowing, but otherwise these are 2 very good websites which will have all the GTA listings and the neighborhood and the surroundings even in there. Next one is Treb. Okay, let's go through here, this next one, which is called treb.ca. It is TRREB.ca. Again, you can search, click on this one, and you can search the GTA listings in here. So this one will again give you all the format there. You can accept all these particular terms and conditions and then take it to the next level there. So this will give you a very, very good idea. Where can I find these properties in this particular price range? So this format gives you 3-4 things and how to go about it. Now let's add when there are some issues with any of these particular information, and let's see what I can guide you there further. Now here is something that is very, very interesting, and you will find it very good here. Regular buying and your credit score is above 680. So let's go through this particular one. This is if your credit score is 680 and above. Banks have a cashback program, and you can also get money for renovations. Call me to walk you through this in particular detail. I'll take a small walk you through here, but in detail you can call me and again walk you through. If your credit score is 680 and above, few banks have a program which is called the cashback program. The interest rate is higher, but let's say suppose you had to borrow some funds, and also you do not want to use all your funds towards your down payment, because whenever you are going to purchase a property, there are surprises waiting to happen. And now let's say suppose you had $30,000 and you have given all that in the down payment and all in the closing cost, and you're now struggling even for any surprises that comes on way. And that may be one of the reasons that you're sitting on the sidelines. Banks have a cashback program, and that is where after the closing, they'll give you between 3 to 4%, depending on which lender you're working with, and that can help you with having some funds with you. So you are not left out for surprises completely. And there are lots of surprises. You have appliances, you have other stuffs that can come in over right after the closing. So that can take care of it. Now, the second thing here is, which I can also walk you through, is money for renovations. This is how somehow this detail works in over. Let's say suppose you get qualified for $500,000 property on the basis of your income, your down payment, your credit score, and everything. But you're only trying to buy a property for $450,000. So there is a gap of some portion, that because you were qualified for $500,000, but you're only trying to buy a property for $450,000. So if you're trying to pick up a fixer-upper that requires some work, the banks may give you another additional 10%. So that means you bought a property for $450,000, another $45,000 they may give it to you. Again, it may have other ramifications like the interest rates and things like that. And that also can be added to your mortgage. That is also called cashback plus even money for renovations. And you will have to go again. You will have to first do the renovations, and then the banks will give you those funds. So there is a format which can also be utilized. So the thing that I'm trying to explain to you here is, I may not be able to walk you through completely because everyone's scenario is very different. There are lots of alternatives. So don't sit on the sideline. Stop paying your landlord's mortgage and start taking some action. This is what is the gist of this particular webinar, and that is how I'm walking you through this particular format here today. Now, let's go through another scenario, which is step number 9. Your credit score is below 600. Most of the times, there are good lenders that if your credit score is above 600, you may be able to even procure a mortgage from B lenders. So it is not that it is the end of the game. But let's say suppose your credit score is way down in the 400s, in the 500s, you have a past bankruptcy, you have a consumer proposal, you're still sitting on the sideline. We have a program which is called Rent to Own Homes program. Call me through. I will walk you through uh, the whole detail of that particular format. There are various other companies also who do rent to own, and you can look into that particular format. So the bottom line we are trying to explain you here is, don't sit on the sideline. Start building your own equity. So you cannot, if you have an income, you have a down payment, you're struggling with the credit score, we have given you two options. If the credit score is extremely good and the down payment is missing, you may be able to get some help with family and friends from RRSP and for gifts and things like that, and then also from the cashback. If you have very good income, you have excellent down payment, but your credit score is messed up, you can also start with the rent to own program. So everything can be covered from all kinds of formats. So that is what I am trying to walk you through here. Now let's go through. So these are some 8 or 9 steps. I hope you got some ideas. Now these are some of the links in the PDF that can help you. These are some of the client testimonials here. So you can click on this. I have been in the business for a very long time now, almost close to 20 years. I'm a full-time realtor, and so I've done numerous deals in these number of years. You have a very good client testimonial page in here. I hope I can get this there. And once that is there, you can go through all of these client testimonials, and from large number of clients who over the number of years have given me their feedback and what I was able to accomplish. And so this will walk you through and give you some semblance on how to act, and on your professional. If you need to work out with me, I'll be glad to put it all together for you. Okay, let's go through the next stage. You can fill in all your contact information here and send me a message. And this is one of the things that I would strongly recommend you do that. This is a newsletter, and you can click on this one and come over to the newsletter there. As soon as it is up, I will take you there. This is a newsletter where I curate 8 to 10 articles on a daily basis, and click on the subscribe, and you will be able to get the latest what is going on in the market at the moment. So you will have daily articles in your email, and which will guide you what's going on in the market. Is it a good time to act? And now one of the main topics that is getting picked up here is that the interest rate is very high. Yes, the interest rate is very high. And as far as the news is going, the interest rate is still going to go higher. That is what is the news coming. But the property values have gone down substantially. So even let's say, suppose for argument's sake, you may be paying $200 or $300 per month extra on the interest. So that may come to around $3,000, between $3,000 and $4,000 per year. Whereas the property values have gone down by $50,000 to $100,000. So it is a good time to act. You may work with a variable interest rate, so that when the interest rate goes down, because it cannot remain there high ever, that the market keeps on going up and down. So that is what it is. If you are sitting on the sideline and just hearing that information, interest is higher, no need to act. No, the prices have till last year, even till February or March this year, we were struggling with multiple offers. The prices were, every property had to be given $50,000 or $100,000 more in order to procure it. That has subsided. You are sitting at a very good time frame. If you are wanting to do a buying, it is time for you to act now. And that is also one of the things that I wanted to share. So all these informations with this particular articles, newsletter articles, you will be able to grab on those particular ones. So let's pick up the next one. Again, here is my information here, and I'm with Remax Hallmark. My office is at Bayview and Shepherd, 685 Shepherd Avenue East. And you can submit all your information, fill in all your information here on this PDF and submit it here. And you can check me out on the Facebook, Twitter, LinkedIn, and Pinterest. And these are some of the social links that are there. And that will help you guide. And let's see if there are any other queries from any one of them. And if not, then thank you again for joining. Again, I repeat myself, people are making more money in real estate than their incomes. And so it's a request, stop paying your landlord's mortgage and start building your own. So I hope I was able to answer a lot of your queries there. If by chance I've missed, or you're still sitting on the sideline, still not sure what exactly, your scenario may be different. So give me a call. My numbers are here. My number is right there. And also on the, if you will see on the right hand side, I am always having my number there. And you can see it as on the live. So again, thank you very much. Feel free to call. Feel free to have a general discussion on real estate. I'll be more than happy to assist you and walk you through. Thank you guys. Thank you very much. And good.